As we learn about operating liabilities, we need to discuss gain and loss contingencies. First of all, contingency is an existing condition, a situation, or a set of circumstances that involves uncertainty. The uncertainty will be resolved when one or more future events occur or fail to occur. There are two types of contingencies. You can have a gain contingency or a loss contingency. Let's focus on the gain contingencies first. Basically, it's an existing condition which has uncertainty, and that uncertainty has to do with possible gain, but we won't find out about it until the future events occur and things are settled out. A gain contingency may be something like a lawsuit where a company is going to be awarded a settlement. So we could look at it as a contingent asset. Here's the accounting though. We actually don't show contingent gains. They're not recognized or even disclosed sometimes in the financial statements due to conservatism. We don't want to overestimate our revenues. We want to wait till they actually occur before we show that it is an actual gain. If there is a highly certain likelihood that you're going to have a contingent gain, then you can go ahead and disclose it in the footnotes. But again, we're going to wait till the actual cash flow occurs before we recognize it. Okay? So, gain contingencies, mostly footnote disclosure only when it's highly certain. That's very different from a loss contingency. So let's take a look at those now. So in this case, you have the existing condition, lots of uncertainty, but it's a future possible loss to the entity. So we have many different examples of these, including lawsuits, warranties, premiums, coupons, and potentially some environmental remediation liabilities. So there are two main things that we have to consider when we're figuring out how to do the accounting for loss contingencies. The first one is understanding that probability that the company will ultimately incur a loss. The second one is, can we reasonably estimate the amount? So let's look further at the probability part. What GAAP has told us is that we need to classify our contingent liabilities into three categories. Probable, if the loss is likely to occur, that's the language, there's no percentage in there. Remote, the probability of occurrence is only slight. And reasonably possible, it's not likely, but it's more than remote. Okay, so those are our three possibilities when it comes to probability. Then remember, the other thing is, can we estimate it? All right, there's three possibilities of how we can do the accounting for it. Accrue a loss contingency basically says do a journal entry. You're recognizing the event, and what you're doing is you're debiting a loss and crediting the liability. A second possibility with the accounting is that you can just disclose it in the notes. And the third possibility is you don't do a journal entry and you don't disclose. Well, those are our three possibilities, and let's look at how they're used when it comes to loss contingencies. This nice little table will help us. We have our three possibilities of probabilities on the left and can be reasonably estimated. Notice that under the probable and can be reasonably estimated, that's when we show the liability, we recognize the liability, we recognize the loss, and we have to describe it in the footnotes. If you can't reasonably estimate it, but it is probable, let's at least talk about it in the footnotes. In the second case, when it's reasonably possible and you can estimate it, let's just go ahead and do a footnote disclosure only. And of course, if it can't be reasonably estimated under reasonably possible, then let's still do a footnote disclosure. And finally, when it comes to remote, we don't have to do anything. No disclosure, no entry. Let's assume that there's a range of the loss. Let's say between $100 and $500 million. Well, what are we going to do with that? If we can't identify a single most likely outcome, US GAAP says, let's use the minimum point of the range, but we're going to disclose the full range in the footnotes. Now that's different from IFRS. IFRS actually has you use the midpoint of the range. So in summary, we don't do a whole lot for contingent assets. We sometimes recognize them in the footnotes. When it comes to contingent losses, we do a journal entry when it's probable and estimable. In the other cases, we just do footnote disclosures, and when it's remote, we don't do anything at all.